Mark Zuckerberg just reportedly spent up to $200 million buying a property on a private island in Florida, not Silicon Valley, not Los Angeles, Florida. And if you think this is just another billionaire buying a trophy estate, you're missing the real signal here. Because when one of the richest men in the world moves hundreds of millions of dollars across state lines, that's not about lifestyle. It's about taxes. It's about policy. It's about where wealth believes the future is most safe. And when wealth moves, real estate moves with it. So reports from major outlets indicate Mark Zuckerberg has expanded his holdings on Indian Creek Island in Miami-Dade County, often called the billionaire bunker. Top reported values there between 150 and 200 million. Now, Indian Creek has quietly become one of the most concentrated pockets of ultra wealth in the country. Hedge fund managers, tech founders, private equity leaders. But here's the real question. Why Florida and why now? So here's the part most headlines gloss over. California has repeatedly introduced proposals for a wealth tax, including a legislation commonly referred to as AB 259 in prior sessions. This proposal has included a 1% annual tax on net worth above $50 million, up to 1.5% on billionaires, an inclusion of unrealized gains in some drafts. And this proposal even has an exit tax provision that could tax residents for years, even after leaving California. But let's pause there. This is not an income tax. It's a tax on total net worth, and that includes stocks, private company equity, investment properties, illiquid assets. Now, it's important to note this has not been passed into law, but here's what matters. Markets move on expectations, not just legislation. When ultra-high net worth individuals see repeated attempts to tax accumulated wealth that they've made and possibly even tax their wealth after they've relocated, they don't want to wait for the law to change. They are going to be proactive in their decisions. What they do is they reevaluate risk. And when you're worth tens of billions, even a 1% annual wealth tax becomes a 9-figure decision every year. And that isn't emotional, that's math. So let's look at California and Florida. Let's start with something simple. California has a top marginal state income tax of 13.3%. High capital gains exposure, aggressive regulatory posture towards high income earners, and ongoing discussion about wealth taxation. Now let's look at Florida. No state income tax, no state capital gains tax, no estate tax. And for someone who with a net worth largely tied to equity like Mark Zuckerberg, that difference compounds massively over time. On a $1 billion liquidity event in California, the state tax bill alone could exceed over $100 million. In Florida, it's zero. So that's not a lifestyle decision. That's long-term capital preservation. So high net worth individuals, they think differently. They're not looking in years, they're looking in decades. And they ask, where is policy trending? Where is long-term exposure the lowest? And where is tax predictability the highest? And IRS migration data has already shown Florida has one of the largest net gainers of adjusted growth income in recent years, while California has been a major net exporter of high-income earners. That wealth tax debate didn't create migration, but it reinforced it. Here's where this matters beyond billionaires. When wealth relocates, first of all, capital follows, then businesses follow, then executive teams follow, then more jobs follow, and housing demands at that point expands. So the luxury markets, they move first, then high-income housing tightens, then workforce housing demand strengthens. Then secondary markets, those also absorb spillover. This is the multiplier effect. And we saw it after 2020 in Miami, Palm Beach, Tampa, Orlando, Northeast Florida. And when someone like Zuckerberg buys on Indian Creek Island, it's not just a real estate transaction. That's something important that we got to understand. It's a confidence signal. And when markets are so psychological, when capital fears being safer in one state than another, then that narrative really starts to have an unbelievable influence on so many others making this decision as well. Most investors make a mistake here. They think that this is a luxury story. It's not. It's a supply and demand story. Ultra wealth migration increases, venture capital then deploys, more businesses are formed in those areas, higher payer jobs are created, it helps the infrastructure investment, and that will obviously come into more effect with property investment because there's going to be more money, more demand, more people. And that demand eventually flows outward into attainable markets and build to rent communities. You don't need to own a waterfront estate to benefit from migration. You need to own property in markets that are absorbing the ripple. Smart investors don't chase headlines. They position where the growth is spreading next. That often means growth corridors, new construction, stable single-family rentals, markets with expanding employment. And while billionaires move for tax reasons, everyday families move for more financial stability within markets that have more capital available. This is where companies like Southern Impression Homes enter the conversation. While headlines focus on $200 million estates, the real opportunity often sits in the purpose-built rental homes, growth-focused markets in Florida, new construction with lower maintenance exposure where more people are going to be ending up. And the building strategy is focusing on strategic Florida locations where there's durable housing product, investor-aligned construction, long-term rent stabilities, and fundamental numbers that allow you to cash flow from day one. And when the macro capital flows into a state, positioning in durable housing, it becomes critical. And migration, again, doesn't stay at just that luxury level. It's a long-term demand story. So make no mistake, Mark Zuckerberg didn't buy $200 million worth of Florida real estate because of the palm trees. He bought it because policy signal matters. And when that tax policy shifts, capital behavior shifts, and that reshapes markets. And Florida isn't just gaining residents, it's gaining large balance sheets. And when balance sheets move upward, housing becomes higher in demand because there's more capital flowing into the area. And the overall truth that people miss, by the time a policy passes, the smartest money has already moved. It's already happened. These people, if it does pass in California, Mark Zuckerberg, he's not going to get caught with a trailing tax that maybe taxes him 5, 7, 10 years after leaving California. He'll be out before it's even put to legislation and agreed upon. And by the time the migration really starts to show up in the census data, investors, well, they're already positioned. If you want to have real estate insights that go deeper than that surface level headline, or you want to understand more about macro policy, capital flows, and migration impacting the housing markets before it even shows up in the pricing charts, then make sure you subscribe because we're going deeper into exactly this. Because markets don't wait for permission, they move quietly, and the investors who understand the signals early and takes action are the ones who benefit the most.